Hello, everybody. Welcome to this new KeytoProp webinar. Welcome to the second round, actually, of this new format we introduced last week, which is Prop in Action. Before starting the webinar, of course, let's wait a couple of seconds for more of you to join. I know the vast majority of you most of the time joins like a couple of minutes later. Considering like the start of the webinar, so let's wait a couple of additional seconds. And well, first of all, let's. I'm gonna explain you again this new format we recently introduced, which is like. I mean, we called Prop in Action because it's a live trading format. Essentially we bought one of our best challenges you can find on our website, and what we are trying to do is like we are trying to pass the challenge and get funded. Okay, which is of course is a long way. It's going to be difficult for sure, but I mean, this is what we are doing. We are trying to give you some tips and also some suggestion about how you can use like complex strategies or complex instrument like some of our platform in order to have better trade setup and in order to pass the challenge. So normally what we do is like we essentially we give you a brief or like a brief recap, yeah, of I would say of the previous week, considering all the most important market movers of the week and so on, and then we cover the current week with the most important market upcoming market mover, and then we jump on the market trying to find some potential trade, some potential setup. So first of all, let me share my screen. Let me share my screen for a second. So here you go. You should be able to see my screen right now. So essentially, this is the situation. This is the situation today. But as I told you, let me start from the beginning. So essentially, I told you like this last week we didn't have any. We hadn't any important or significant market mover. The most important news came from the weekend, essentially, because we had the two news related to the duties that Trump administration is trying to impose on different countries. We have the first news saying that essentially between China and the US, the two parts that are like negotiating in northern Europe, they reach essentially an agreement in the sense that they will delay for additional 90 days the first day of the tariffs, let's say, in order to reach a deal before the next day. So date, sorry. So this is, of course, this was or has been actually a good news for markets. We had, as you can see here, quite big gap up during the first day of the week at the opening of the Asian session, and the second news, of course, related to duties was the fact that essentially US and Europe finally reach a deal. The deal is definitely more in favor of the US than Europe, and the draft, at least because it is not let's say a legally binding agreement, so it's just a draft. But from what we understood, essentially the duty will be 15% on almost every kind of goods and services, apart from steel and aluminium, because on steel and aluminium, Trump wants to keep 50% tariff. And then, of course, we came to the tricky part of the deal, because essentially Trump would like to impose tariffs also on pharmaceuticals and semiconductor, but essentially what Europe said that these two sectors had no duties at all. So and the funny thing was that essentially the two draft published by the US and Europe on the other side were like kind of different. So as usual with this new administration, is always like better to wait, understand all the details, and wait for the agreement like to be signed, before like taking any conclusion, because otherwise it's always a matter of like I mean you follow the news on the market, but then you have something on the opposite side. Is always I mean Trump administration, they show us they change their mind like from one day to another, so it's like it's very difficult to trade following this news. The best thing to do, in my opinion, is like try to understand where we are from a macroeconomic point of view, but then of course try to trade from a technical point of view. Then let's jump on this week. I'm going to show you the most important market mover we had, the upcoming one, and the one we had yesterday and today. So essentially, yesterday we had just a couple of market movers that were CB consumer confidence and JOLTS job openings. The first one, which is really indicative, let's say, of about the consumer sentiment in the US, came like really above the expectation, 97.2, with a forecast of 95.9, which is actually above expectation, above the previous mark. So regarding the consumer sentiment, I would say that the situation in the US is quite good, and also regarding the job openings, we had data which was like in line with the expectation. So also the job market, waiting for, of course, additional data coming on Friday, is still at least solid. Okay, this is very, very important. Regarding the rest of the week, well, actually today we had two important market mover, the ADP non-farm employment change, that came above the expectation. Normally, as you probably know, there is like a close link between the ADP figures and the non-farm payroll figures. But like in recent weeks and recent months, what we saw is that these two different, let's say, indicator lose a bit their positive correlation, let's say. So we do not know why yet, but normally they are highly positive correlated, because they measure the same thing. So they measure the number of non-farm payroll in private sector. But non-farm payroll, of course, is released by the BLS, which is the official Bureau of Labor in the US, and this one is coming from the ADP, which is a company actually, which if like I'm not wrong, they just released the earnings today before the opening of the market. But yeah, this is the official one, and this is the private figure that came from a private company, try to forecast the same number. Okay, so the same thing. Then tonight is going to be one of the most crucial day of the whole week, because we have the FOMC meeting. The FOMC meeting is like I mean the Federal Reserve is expected to keep interest rate at the same level. There is an interesting thing about tonight Fed meeting, because essentially, most of the time, like every member normally agreed with the decision, or maybe you can find one member that disagree, but most of them, they agree with the final decision of the chairman, you know. But this time, and there is like a very interesting article that Nick Timiraos wrote on Wall Street Journal. Nick Timiraos is one of the I would say most influential Wall Street Journal economist and journalist, and he is really close to the Fed and FONC member, and he wrote this very interesting article. Saying that this meeting could be the first one. I'm going to show you here with this. I took this chart from the article, and this is a situation where essentially what we can see in this chart. We see essentially the number, so 3, 2, 1, or 0, the number of governors that essentially disagreed during the different FOMC meeting with the final decision. And as you can see, starting from let's say 1995 on, so for the last 20 years more or less, we never had a situation in which more than one governor dissent with the decision. This time, Nick Timiraos was saying that essentially we could have two governors against the final decision, and these two governors should be Bauman and Waller. Those two governors are the one appointed, of course, by President Trump. They would like to lower interest rate. We already discussed how Waller, in his opinion, and why. In his opinion, the FOMC should lower interest rates starting from tonight. But I mean, in my opinion, if you want like my honest opinion, I think that President or Chairman Powell, what he's doing is like he's considering the overall situation. And if you consider the overall situation, you have a situation in which the inflation is cooling. Inflation is coming down to the Fed target. Yes, it's true that like we saw some tariff impact in the last CPI and PPI data, but definitely the inflation is cooling down. Also, today we had this GDP release for the second quarter, which beat expectation, way above expectation, 3% against 2.5% expected. So economy is growing, the inflation is coming down to the target, and also the labor market. Even if it's it looks like losing some momentum, but is definitely still solid and quite tight. So considering like the overall situation, probably Powell will decide to wait some additional month, because to me the most important thing he has in mind is like let's wait until we can see for sure some tariff impacts in let's say in CPI PPI data. Okay, so this is the situation, and this is what I think they are gonna do. I mean, I think even if we have two members that vote against the final decision, probably tonight the Federal Reserve will not cut interest rate. They will wait. All the members and all the Fed will wait for the next or I would say one or two figures about CPI and PPI, but especially the PCE, which is the Fed preferred gauge for inflation, which is coming actually tomorrow, and they will figure it out the best timing for resume rate cut. Okay, so these are the most important significant market mover of the whole week. We have also let me highlighted them here. So we have, of course, the FOMC tonight, which is very, very significant. Then we have tomorrow, we have also the core PCE price index, which is, as I just told you, the Fed preferred gauge for inflation. And we have also as every like every Thursday, we have initial jobless claims, which is like an indicator about the labor market. And we will have also the continuing jobless claims, because normally I always suggest to double check initial jobless claims like at the same time with continuing jobless claims. Okay, just to have a better understanding of the labor market dynamics. And finally, on Friday, we have, of course, all the data related to the labor market in the US. So we have non-farm payroll, unemployment rate, and average hourly earnings. And then we close with manufacturing PMI and ISM manufacturing PMI, which will give us a better understanding or additional information about the industrial sector in the US. These 3 days, as I told you at the beginning of the webinar, will be crucial also because of the earnings. We have a couple of important earnings. I put this chart on my Telegram channel, so you can also find the same charts. I mean, over there. But we have. Sorry, just let me. Here we go. So tonight. After the market closing bell, we have Microsoft and Meta. Tomorrow we have still after closing bell, we have Apple and Amazon. So 4 out of 7 of the Magnificent 7 are reporting between today and tomorrow. Today we have also FOMC meeting, and on Friday we have also the PC figures. So these 3 days are going to be very, very intense, I think, and yeah, we need to pay attention on the market, because volatility can come like really, really quick into the market, and that for example, some volatility measures, like for example the VIX or different volatility measure are completely on the downside. So the VIX is at the lowest point since a lot of time ago. So the volatility is really compressed, and most of the time, this period where the volatility is super compressed, they end with a spike in volatility. So we need to pay a lot of attention. The last thing I'm gonna discuss with you before going live and checking what's happening into the market is an important auction, an important 7-year bond auction that happened yesterday in the US market. Because of course, even if we follow most of the time the equity market, the bond market is the one of the most important one, if not the most important one. And we need, of course, to follow it. So the auction of the 7-year bond was really, really good. I mean, to be honest, I do not remember these figures about a 7-year auction recently. So this is a very, very good auction, to be honest with you. And you can see it from the tail, because we have a negative tail of 2.6 basis point against a 6 moving average of minus of a negative tail of 0.6 basis point, which is a lot, is more than 4 times the average. So this figure by itself means already that we had a huge demand during the auction. Bid to cover 2.79, the average is 2.6, so another good figure. And also, if you check at the distribution of the auction, we have directs that essentially represent internal demand that bought 33.68%. So they bought way more than the average. We have indirects that represent the not internal but external, so international, let's say, demand during the auction, and the result was slightly below the average. But the most important thing is this one. So the dealer, which are essentially some companies that are forced to buy what is left from the auction, they bought only 4%. So it means the demand was huge. Both from direct, both from and from indirect, but you can very like you can see that this was a very good auction based on the tail. Okay, because a tail of 2.6 negative is really a lot. And well, if you're not that confident, like trying to understand the result, but most importantly, if you're not very confident in like trying to interpret the auction results, what you can do is like I wrote recently an article on our website about how to read and interpret a US bond auction. You can have a look, or you can just text me in my channel, and I will like forward to you the article. And in the article, you can find like a brief sum up about what are the most important things to check when you discover the auction results. And so you will find there, for example, what does it mean tail, what does it mean bid to cover, what does it mean directs, indirects, and so on. So you will find all the most important definition, and also how to interpret the results. Okay, so this was related to this week actually, and now I would say we can try to understand what's going on in the market. Well, first of all, let me show you our prop account. So is if you check here, is exactly at the same level as it was last week when we did the last webinar, so the last round of prop in action. And yeah, so now today what we're going to do, first of all, I'm going to give you the analysis for the S&P 500, which is valid for the whole day. Of course, I will give you some levels, some resistance and support levels, and some range levels. But it's going to be very important to be careful, especially like when we will be close to the Fed event, because with the Fed event, of course, a lot of volatility is gonna come into the market. So this level could be like even broken somehow because of the volatility. So keep those levels until the Fed meeting. When there is the Fed meeting, to me, the most important or one of the easiest way to trade, to be honest, is not to trade, because it's completely useless. The market is full of algorithms and high frequency and stuff like that. So there's no point to me to trade discretionary during the release of a so important news, or especially during the press conference, for example. Okay, so this is a very interesting movement here. We can see in the S&P 500, so also on Nasdaq, I assume. Yes. Okay, so now I'm going to show you something. Okay, let me know if the one of you which are like connected to the webinar, let me know if you already participated to one of our webinars, because otherwise I'm going to show you also another time an additional time, sorry, the setup I have here, because this is the setup I use to trade every day. So I mean, of course, our props, so KeytoProp, use as platform use MT4 and MT5, but we normally, to do analysis, to do in-depth analysis, and to do real trade, what we do is we use normally volumetric analysis and order flow volume profile logics to trade, and of course you cannot find this data on MT5 or MT4, but you can find it elsewhere. So what we are going to do normally is like we use this platform. So this platform is Volumetrica trading platform. This is the Voltsys, and then we have another platform I'm going to show you later. but is the classic order flow or volume profile platform. Okay, the cool thing we have is that essentially the platform team created an expert advisor that you can link, you can install on your MT5. Like, for example, in this case, I'll show you the other time. So, for example, you can attach this indicator here, volumetric trading, and you can trade from volumetric trading platform, and your trades will go at the market in your prop account. Okay, so this is really nice because you can even let's say do not have a look at the MT4, because you can just trade and move your stop loss, take profit, break even, and so on, all from here. Okay, so this is the 50-minute chart of the S&P 500. Well, first of all, let's start to discuss also the 1-minute charts, because the 1-minute chart, what we can see essentially, well, this is a very interesting beginning of the week, because for the very first time since for sure since the beginning of since the end of June, we have one Monday and Tuesday which are both negative. So this is with lower highs and lower lows. Not a very brilliant start of the week for the US indices in general. But I would say that, of course, the main trend, as you can see, is still rising, is still intact, and as we discussed last webinars, during the last webinars, in my opinion, if prices do not break below this area, so below 6,241, the main trend will remain intact. If we start to accumulate or to distribute below this level, then the other levels, the other support levels I'm considering are these 6,100 and 5,800. So because they are also they represent also 5% drawdown and 10% drawdown from the historical high. Okay. And normally these round percentage are really price sensitive. So for those of you who want to trade, for example, in the long term, so like, for example, in my personal portfolio, I'm long of the S&P 500 because I have, of course, most of the time I have one or more indices. So the percentage allocated to stocks is quite constant, let's say. And in order to increase right now, what I'm waiting for is I'm waiting for a pullback of 5 or 10%. So I got some order here, some orders here, just to buy lower the index. Okay, so this is just to give you an idea about what's my opinion for the future, and what's my opinion if you have like an important portfolio you want to bring for the long period. Okay, even from like a volume profile point of view, I mean, prices like they created this very crucial volume area, and then we have a low value area, and then another value area. So prices now are even above the low volume node, separating the two value areas. So the trend is really an uptrend. We are on the historical high. There are no sorry, I need to recharge to reload the chart. Sorry, and yeah, I was saying we are below historical high. So the prices and all the investors have no like resistances above the historical high. So the momentum, like to lose momentum, we need a catalyst, and I don't see, to be honest, this catalyst on the market. So I don't see essentially a reason why the S&P or in general the US stock market should drop by, for example, 5 or 10 or 20%, or maybe enter in a bear market. I don't see any catalyst, to be honest. We need to wait for some levels to be broken downside to be sure, and we need definitely a catalyst to start a proper retracement, a proper pullback, or a huge drop in the index. Okay, so regarding today, let's move on today. Unfortunately, we are in the Fed day. Okay, so tonight there is the Fed, and if you go back historically, like every day there is the Fed. Market is more or less for the whole day is going to be like a sideways market, and then after the Fed, after the decision, or a rising market, and after the Fed, so tomorrow we can normally have a drop in the market. Okay, so let's see if this pattern that we call the Fed pattern happens again. So a sideways or rising market before the meeting and a dropping market after the meeting. So this is what happens statistically on average. But of course we need to take care and to always double check before entering in some trades. So today the S&P height should be around this area here. So I have two areas actually here. I'm going to zoom in just to give you more details. So I have a short area going from 435 to 440, and then I have another short area going from 438 to 443. Okay, so these are the two main areas where I will look for some short possibilities, some short trades. If I have to give you, I mean, I like to think in areas and not in levels, because of course the market doesn't work per levels. I mean, for an institutional which has to buy, like for example, I don't know, let's say 400 or 500 contracts of the S&P 500, or even 1,000 contracts. Okay, for that institutional, for example, he knows that he has to sell in around, for example, around yesterday heights. Let's say, let's assume we have this institutional that has to sell around yesterday high. So for an institutional that has to sell 1,000 contracts, I mean, what's the difference, like selling at 438 or like 438.50 or 438.75? Like, it's completely the same. Doesn't matter. Okay, doesn't matter. So we are trying to think per areas and not per levels. So these are the two main areas where I will look for some absorption and then some potential short trades. And but still, if you want like static level, I'm going to give you 438 and 442. Okay, so these are the two main resistance level for today. The S&P should not mark a higher, which is higher than this area. Okay, it could always happen. We are talking about probabilities. We are talking about the fact that 70% of the time the market closes within these two ranges, which are the top one, the high one, and the lower one. The lower one, unfortunately, today is a bit higher. I'm sorry, is a bit wider, and the reason for that is because of volatility. So normally, as you know, I create this kind of range. Of volatility range based on the straddle value of the zero DT option, and of course when there is a very important market mover, like for example tonight that there is the Fed meeting, option traders are I mean, there is more volatility on the market, more implied volatility on the market, so the straddle is more expensive, and if the straddle is more expensive, the range will be wider. Okay, so normally is always around 20 points, something like this. Today is more than 30. Okay, so we have essentially other important levels are definitely the 6,400. This is I would say, I don't want to say a line in the sand, but it's going to be quite similar in the sense that if prices drop below this level, we can see a decent sell-off that probably is going to target the lower range area. Okay, so this level 6,400 is very, very important, especially because we have a huge negative delta here. You see the huge red bar, and well, nothing. The market is completely sideways. As you can see here, this is the 15-minute chart. We are at the daily high. We are at the daily high, and now I'm going to show you this one, which is like the liquidity side of the market. So as you can see here, the situation is really like kind of stuck because we have a lot of liquidity, you see, but this liquidity is moving. They move again. So it's not like I mean, it's real liquidity because actually they hit it, but I mean, the situation to me is not really clear for the moment, let's say. So now what we're going to do, let's try to find some potential trade. Well, first of all, we are going to put some orders. We're going to put some orders that we will keep active. So just give me a second because I'm gonna change my. Here we go. Okay, so we are on 2-minute charts. Because on 2-minute charts we need to do a different job before being able to trade. So these are our levels. Yeah. So this is the most significant low volume node, which is like the closer to the price. So let's wait at least for the prices to reach this low volume node, and then we can decide how to move. Normally we trade low volume node contrarian, but in case of breakout, of course we can also trade them like trend following. Okay, so either we wait for the price to be here and short, or we wait for the price to break and then we go longer on a potential pullback of this level, trying to target this area. I mean, considering the Fed pattern, I would say that there is more probability for the prices to rise before tonight meeting, and then, as I told you, normally prices tend to drop after the Fed meeting, not before, because it's like the typical buy the rumors and sell the news, you know. And this is what happened on Monday. As you can see here, this is what happened on Monday, because after the news related to news related to duties, so related to the US and China deal, well, not deal, actually they postponed the pause, and about the EU and the US deal, the market, what the market what did the market essentially, or how the market moved? They opened with a gap up, but then as soon as Wall Street opened, they came back to the initial level. So this is a typical pattern of buy the rumors and then sell the news. Why? Because of course you see the headline, like all the traders, all the investors see the headline, the Bloomberg headline or whatever, and they see and they say, okay, this is a deal, this is a good thing, let's buy. Then they buy. But then they realize that, for example, if you take the US EU deal, then they started to realize, like, for example, okay, but this is not a deal, this is just a draft. And then they started to realize President Trump published a draft, and then the European Union published another draft, which is completely different from the one published from President Trump. So they realized that the confusion around the news, and they sell it. Because markets and investors in general, they don't like above all like uncertainty. Okay, so this is the situation now. Well, I would like to give you some trades. Well, let's place first of all I need just a second to attach the sorry, made a mistake. I need to attach the expert advisor, otherwise we cannot trade. Okay, it's waiting connection. As you can see here, it's waiting connection. And then I can connect it from here. Just give me a second, guys. MT5. Okay, now it is connected. Okay, good. So the first thing I'm gonna do, I'm gonna place, and this is, I'm gonna place a limit order here. Okay, just to, and then, okay, and then for the target and take profit, we will think about it later. But the most important thing is like the, I'm gonna place the order, the sell limit order here, and I'm gonna place also a buy limit order down here. This is going to be a bit tricky because the area it's quite huge, but I will try to. We will try, of course, to do our best. We can actually put also two order in here, so another limit, and this is everything for. Okay, so. Perfect. So this is the orders I'm gonna use for the rest of the day. So I will wait for sell the S&P here or down there, but of course I will manage them like manually. Okay, because essentially these are the trades I like to do on the S&P when there is more probability to have a potential good trade. Now I give you all the levels for today. I mean, the most important one you need to consider. Here you can find additional support, and which are essentially 350, 340, and 325. In yellow, you have highlighted all the low volume node, and these are a really, really nice area because as you can see, we have huge negative delta that will influence prices for sure. Okay, so now we are on the height. Let's see if we can do something on Nasdaq. Let me double check because I'm trying to do something. I'm going to show you also these order are going to be the orders I will keep until tonight before, of course, the FOMC meeting for the challenge. Okay, so I'm gonna wait for the prices to reach either 437 and 75 or where is it? One of the two in green here, so 382 and 25 or 371 and 25. If the market hit one of the levels before the Fed, I'm gonna keep the order. Otherwise, I'm gonna cancel it. So I'm gonna keep it until let's say 1 hour before or half an hour before the release, and then I'm gonna cancel it. Okay, I don't want to go at market when there is like when there is the news. Okay. Then I didn't see, to be honest, other potential trades here on the S&P, at least on the S&P, and I'm gonna show you something different. I'm gonna show you something different just to not, let's say, lose our time. Okay, just give me a second to resize everything. And this is Nasdaq. This is the NQ mini. You have the mini future on the charts, but we trade, of course, on the micro. Okay, which has like a lower size. Okay, so what I'm trying to do here, and this profit you see here is just simulated, so it's demo. Okay, it's not real. I'm just trying to use one of my old strategies also on Nasdaq. And the strategy is well, I wouldn't say it's a strategy. I prefer to call it like kind of methodology of work, and because it's very discretionary and it's not like a kind of strategies with the fixed rules and so on. But what I'm like trying to do on Nasdaq, I'm using these strategies also on the S&P 500, and but yeah, on Nasdaq it's much more let's say quick to to be implemented, and because of the volatility. So the volatility is higher on Nasdaq, and it's really let's say easier to collect some profit with this kind of strategy. So this strategy is, as you know, it works better on smaller time frame. So I prefer to use it on 2 minutes time frame. You can go to 1 minute, but you can also use it on higher time frame, so 15 to 5 minutes, for example. And it's all based on positive and negative delta areas, intrabar positive and negative delta areas. And it's of course a trend following strategy. So, for example, here the trend is an uptrend. It's definitely an uptrend. We are in a tricky situation because we are not in a situation like this phase here, where it's clear an uptrend because we have higher heights and higher lows. Here we have definitely higher lows, but definitely at the same time not higher heights. Okay, what we have to do here, for example, I'm going to show you here just to do some live trades because while we are waiting for our order to be filled on the S&P 500. But like, for example, from what I can see here, what are the most important negative delta area? So this is a negative delta area, and I'm looking for this area in order to buy. And the next one, where is it? Where is it? The next one. The next one is not really important, but is here. And then we have quite huge one here. Let's see. Okay, here we go. The bigger one is down here. And then let's see. Okay, so these areas down here are potential buy area. The short area, what we need to do is we need to highlight also the positive delta above. So this one, and then we have two. Here's two. Okay. And now we have created our trading, let's say, box. Okay. And now I'm gonna explain you what I mean with the we created like the trading box. Let me, just give me a second. Okay, we are exchanging here. That's perfect. But if we go above this area, where we go? Okay, we go here, and then we go up here, let's say. Then probably even more. We should let's say define this area a bit better, like checking properly every bar with zoom and everything. But now we do not have time because we are almost done with today's webinar. But this is what I'm saying. So we are in we said in a positive and rising trend. Okay, so the trend is an upward trend. We are looking for long trades. Okay, these are also negative area. We can even buy here if the plot it's already gone. Okay. So you see, so for example, the price is here is trying to go up, absorbing everything that is down here. You see, every time he retraces on a negative delta area, like for example this one or this one, he tried to pull back. Okay, so the very important thing here is to wait. First thing, I need to wait. Okay, because I just created and highlighted the most important areas I would like to work within. So the trend is an uptrend. I'm looking for long trades where in one of these area. Okay, I can also use multiple entries, and the trend is still okay. Now we have to buy. For example, we are a bit late, for example, and I will buy again down here, for example. Okay, and then we manage the trade. Okay, these are very like scalping trades. Let's see if we didn't took the okay. and then we can put another limit down here, and then we stop everything. Okay, then we stop everything, because of course you need to stop at a certain point. And let's see. So for example, now what's the most important thing? What I'm waiting for a closing. You see, if prices close above this area, it's fine. Okay, it's fine. We do not have to look. You see, and now we close 15 euro. Done. Okay, very quick. In and out, very quick. Why I close here? Because we are in the absorption zone. So I don't know if prices have like the strength to break immediately. You see, it's coming down. It's coming down. So this is a scalping strategy, and I really like to use it, because this is what I did like since this morning. I'm testing this in demo, and after testing for a while in demo, I'm gonna start to use it also for our prop. That's why I'm showing it to you, and this is a very nice trade. We can and now we can like continue. We can continue because we need to understand where this bar is gonna close. We have 25 seconds left. Well, let's see. But there's a huge movement, because if it closes above these three area, or above one of the three area, we need to, of course, delete the previous one. Okay, and check for the other. So 5 seconds remaining, 3 seconds remaining. And then we started again. So everything, this is the very first good level, and then we have another good level here, for example. This could be dangerous, because once you have this huge bar, it's always risky to try to enter into the market. But we will try to figure it out how to do that. Okay, and now we have other additional like green area, because we have one green area here where we place our order, and then we have another area here. So if prices work here, you see we have only well, it's not a lot, but well, the white one is nothing. Something I just highlighted before, but now it's not needed. So you see, you have your support, and until the price does not close within the support or below, the trend is not changing. Nothing is changing. So we can wait. I don't like to stay in the market for a long time. So probably we can also flat the position here. If well, let's see. Probably we can go a bit farther. Let's say this one, and we have to. Okay, yeah. Let's see, because now is working. You see, is working on this area, this support area, and but still, before the close, we cannot say anything. So we have just to wait, be patient, stay there, and relax, and just think about what the price is doing. See, so let's wait. Okay, now we had another absorption zone here. We could also, in theory, double the position. I'm not going to do that, but in theory, we could place another order down here, because we have another absorption zone here. Sorry, I just took by mistake also a positive delta. You see, now I don't like it anymore, to be honest with you, because like it's also creating some positive delta with a closure that is below. Okay, so we can also like you see, no, it's gone. Let's see. Oh, a bit lucky this time. Okay, we close. I don't like it. We close. We did like €5. Fine. Okay, $5. Sorry. Fine. And then we can continue. And I can guarantee that in this way, you see that I didn't like that anymore because of this area here. So now they created definitely this area, which is red, of course, which is red. And let's see. Because now, if the closing price of this bar is going to be below this area, this means that the trend could also change. Okay, if it's above, nothing changed. And then we will look for other buy entries in the negative delta zone. Okay. We did a couple of trades in demo. I repeat again because you know I'm trading on S&P 500 90% of the time. Now I just place some order here that I can like show you where they are. Okay, yeah, here is connected. So yeah, okay, here we go. Just give me a second. Where are my yeah, okay, here you can find my order, you see. Perfect. And once they are activated, you will see also, of course, stop loss and take profit and all the rest. Okay, so here we are still waiting. And let's see what the Nasdaq is doing. Just give me a second. So you have your order for the S&P, and here it breaks everything. So we cancel this one because we have a close above. This is not closed, and this is not closed yet. So now where we can find like buy entries opportunities down here, definitely. And I would say, well, but I think we are more or less at we reach more or less a peak. Let's see. This could be a nice like a nice entry point. I'm not gonna open it because I'm gonna end the webinar soon. Fortunately, we have like countless appointments, so we cannot stay today like a couple of minutes more. So let's see. Now, for example, if this bar closed down here, which we delete these three area and we start thinking about short trades. Okay. In this way, it's very difficult to be like against the trend. You see, now we have a bit of space down here, so we should also maybe another limit here, maybe, and the top one is gonna be here. So let's see. I'm not in yet. I'm not in yet, and yeah, is falling without me. Hopefully, I see also huge liquidity down there till 516. So until here, this is a nice point. Yeah, but we are late. I think. I suppose we are late. Let's see. Let's see. Yeah. When something like this happen, normally I flat everything and I reconsider everything. Okay, there's no point like to wait here if the price is already down there. You see. Okay, so this is the more or less the trading like activity I'm testing, and probably since like I'm already testing it like for a while. I've been testing it for a while, so I think probably next week or so next Prop in Action webinar, or maximum I would say within 2 weeks from now, we can start implementing also for our prop. So also from my side, you will see some trades on Nasdaq and not only on S&P, which is the instrument I prefer, the instruments I like to trade most. And yeah, so this is pretty much all for today. And let's see, because the S&P didn't even reach. You see, the S&P basically didn't even reach our low volume node here, and because it's really, really, the distribution is like is a I mean, now with this upward movement is not anymore like a perfect D shape, but probably prices now will start to do a kind of sideways movement around the value area high, and then it becomes again a D shape. D shape, and this D shape is going to continue probably until tonight, until when we will have the FOMC meeting. Okay, so I will end the webinar now. Just give me a second. Okay, I will end the webinar now, and I hope you enjoyed the webinar. I hope you enjoyed the analysis, and of course, I hope you are going to use our resistance and support level, at least on the S&P, where I show you we placed the order. We are just waiting for the orders to be hit, and yeah, that's pretty much all. I really hope this new it's not a new strategy, because it's something I'm following on the S&P since like a long time ago. But I hope we can also implement let's say an additional instrument to trade for our prop, which is Nasdaq, and we are going to trade it like in different ways. I mean, we're going to trade the S&P one way, which is like a more conservative way, and we can push a little bit more on the size. And we are going to trade the Nasdaq. We are going to trade it like manually on the 2 minutes, like doing very like scalping, let's say scalping style strategy. Okay. Well, I hope you enjoy, and well, have a good rest of the day, have a good evening, and I'll see you